Today's Tuesday tax tip has to do with depreciable assets. For the many small business owners and home-based business owners out there uh, that may not be aware of it, the IRS allows you to deduct certain furniture and equipment on your tax return. However, these items are typically not deducted all in one year, but have to be depreciated over a number of years. In other words, furniture, desk, chairs, tables would normally be 7-year assets, meaning if you purchased a table for $1,400, if you use straight line depreciation, divided it by 7 years, you would take $200 a year. Computers, printers, telephones, anything electronic typically has a 5-year life. So if you bought a computer for, let's say, $1,800, you would wind up deducting $360 a year for the next 5 years. In addition to the normal depreciation, there's a couple of other things that you need to be aware of. One, accelerated depreciation. There is a method out there, and the calculation itself is a little beyond the scope of this video, but the basics to keep in mind are that the depreciation is larger in the earlier years and smaller in the later years. And the reason for accelerated depreciation is it was originally thought that a machine works best when you first get it, so it's worth more in the beginning years. So that's something to keep in mind for your tax return. And the other bigger item to keep in mind is Section 179. Section 179 is a code put in place by the IRS which allows you to deduct the cost of a fixed asset all in one year. So in other words, if we have that $1,400 table that we purchased, under Section 179, as long as the $1,400 does not exceed our income and put us into a loss, we're allowed to deduct all $1,400 in 1 year under Code Section 179. Currently, you're allowed to do that with up to $25,000 worth of assets. The last few years, though, that number has typically been $500,000, and it's very possible that the government will extend this to $500,000 by the end of December. However, they currently have not. They're still talking about it, and I realize, they're still talking about it. There's like 6 weeks left in the year, but that's just the way the government works. But without question, you can, at this point, write off $25,000, or you can take an asset and depreciate it over its useful life. It's very important. This is a big deduction, and it's important to keep in mind. And it's an area that is a little confusing, so you may want to talk to a tax professional before attempting to depreciate something, but it's definitely something you should keep in mind, and it's a way to have you keep a little bit more of the dollars you make rather than the government. Hope this tip helps you out. See you again next week.